MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
How did Canadian homebuyers do in 2017, and how are they going to do in the new year?
How did they do in 2017, and how are they going to do in the new year? Okay, so in 2017, generally speaking, across Canada, they were misled. The only provinces where they weren't misled would be Saskatchewan, Manitoba, and Quebec. In those three provinces, the markets were at a point where even bad real estate advice really wasn't going to hurt anybody. In other words, the prices were changing at such a small rate that home buyers weren't going to make a mistake. Everywhere else in Canada, though, home buyers were drastically impacted by this false narrative that housing prices can go up forever, that housing prices can defy real estate math, that housing prices are impacted by outside influences that they have never been influenced from before. And that information was conveyed to home buyers because real estate salespeople cannot represent buyers. Now, what I mean by that comment is this. Across Canada, you will see ads for sell your home for I will sell your home for the highest price possible in the shortest period of time, guaranteed. It is legal in every single province in Canada for a real estate agent to attempt to get the highest price possible for a seller, and at the same time for the seller to reward the real estate agent for getting that higher price. In other words, the seller can say, I'll pay you 5% commission. If you get me $100,000, I'll pay you $5,000. If you get me $200,000, I'll give you $10,000. That is legal in this country. What's not legal is the reverse. A home buyer can't say to a real estate agent, look, if you get me that house at a $20,000 discount, in other words, you use your professionalism, your experience, all the skills you have to get me that house for $20,000 less, I'll pay you a bonus of $5,000. That is illegal in every province in Canada. So in 2017, every single home buyer who used a real estate agent to purchase a house, where the real estate agent did not explain, I can't get you the lowest price because I cannot financially benefit from you the lower price, lied to their customers. It was an outright lie, and I will go as far as saying any home buyer who was not told that was going on could call their lawyer today and have all of their commission refunded to them. So every single home buyer in Canada, because of the legislation that exists in this country, same legislation exists in the United States, by the way, the home buyer is disadvantaged. They're disenfranchised. Everything that is done out there is done for the home seller. The real estate stats that are released every single month are for the home seller. You'll hear the new listings to sales ratio, which I've debunked here in this show over and over again. What you don't hear any longer are things that used to be released to the public 10 years ago. You used to hear things about rerun listings. So you would have one column where the new listings would be counted, told to the public, and then you would have another column where there was a column called reruns, which means it's the same listing, but the price has been altered, or they reprocessed the listing again so it looked like a new listing. Even though it wasn't a new listing, it was a rerun. Well, 10 years ago, that stat used to be available in most provinces and for most real estate boards. Certainly the largest real estate board in Canada, the Toronto Real Estate Board, this was a well-known stat. It was a well-known stat until all of a sudden the lawyers got involved with the real estate boards, and they warned the real estate boards that that stat could be used to hurt the sellers. So the real estate boards had to withdraw the publication of that stat because the real estate board was worried about being sued. The brokerages who were members of that real estate board were worried about getting sued. And everybody in the world was worried about getting sued because of that stat. So what that means is, Jim, is that your listeners, most of them, have never even heard about a rerun. They haven't heard about listing cancellations. They haven't heard about expired listings. There are many reasons why the expired listing count is never released to the public. The reason for that is the MLS rules and regulations, which were formulated in the United States by the National Association of Realtors back in the 1950s, which over the last 70 years have evolved to where they are, the point they are today. Those rules and regulations say that you cannot say anything that harms the businesses of a fellow member of your MLS association. That means if there is a realtor, a member of the association, whose listings expire regularly and they don't sell, that information can't be released to the public. As a result, the aggregate of that number cannot be released to the public. So when I see new listings to sales ratios, and I see these numbers appearing in CMHC, StatsCan, every single bank in Canada who does a report, every economist in Canada who does a report, we just sit here and laugh and say, guys, without knowing the expired listings, you don't know what's going on in the market. Because the expired listings are actually the predicator of price change. Your listeners don't know today that there were over 6,600 listings expired on the Toronto Real Estate Board in December. 6,600 listings. That was a record month for listings that were on the MLS at one time and taken off the MLS. That is a record. But you will never read that in any newspaper. You will never read that stat from any real estate agent. Most real estate agents don't even know what I'm talking about. But it was over 6,600 listings that were on the MLS at one time came off without selling. That is a record. So that's why you can have record new listings at the same time the number of homes for sale are actually less than they were the month before. The truth of the matter is, in Toronto, there are headlines out there that say new listings in December in Toronto increased 172%. That's what these headlines say. Produced by realtors in the media. The truth of the matter is, listings were only up 18% because everything expired. Everything was canceled. Everything was rerun. New listings were only up 18%. So in 2017, that's the thing, all of the home buyers that out there, and there were about 500,000 of them, plus there was another 200,000 that purchased a brand new home. They were never told any of these stats. So they weren't able to make an informed decision. And then you said, what about 2018, Ross? Well, what your listeners need to understand is this. In British Columbia, on March the 1st, it gets way, way, way worse for home buyers because the new dual agency laws are coming in. Last week, the Real Estate Council or the Real Estate Association of British Columbia issued a press release that totally lied to the British Columbian public. Totally lied to the public. They were actually pretending that dual agency was limited agency. They were pretending something that has been in the law for the last 80 years is something that it's not. And that they have not been challenged once in the media from this comment. We're talking about 8 decades of case law that has established what dual agency is. In other words, what dual agency is when the listing brokerage, the broker that has the listing, not the sales rep from his brokerage, the entire brokerage, the name that's on the sign, the brokerage name, they are the agents of the seller. If a buyer wishes to purchase that property and they want to use a sales rep from that brokerage, it's called dual agency. It's been called that for 80 years. In 2018, they're going to stop calling it that. They're going to start saying, oh, as long as it's 2 different sales reps in the brokerage, it's not dual agency anymore. Even though the law won't change, even though court cases could go forward based on 8 decades of case law on dual agency, the real estate boards, the real estate associations, the franchise brokerages, the franchising companies are all going to pretend, oh, that's not dual agency. And because the public is already ignorant to how the real estate industry operates, they may get away with that. In Ontario, it's even worse. In Ontario, what's happening is not only are the similar rules coming in to Ontario that will allow two sales representatives at one brokerage to supposedly not do dual agency. It's still going to be dual agency. They're just not going to call it that. But there's also a subset of sales reps in the office, which are called sub-franchisees or a sub-brokerage. So what this means is that this is how bad it is, Jim, in Ontario. The consumer has no idea that this is going on. The registrar has not made one public comment about this change, even though it's been in effect for 2 years. No real estate trade association, no real estate franchising company, no one has gone to the media and exposed this craziness. You can have the following name for a sales representative working at a brokerage. You can have Remax Smith Realty, Doug Jones Brokerage, Sales Team, Doug Jones Group. I can take each one of and if you drop any one of those little tiny components in that title, the legal ramifications are totally different. So in other words, if I drop the Remax Smith Realty from that, it's a totally different thing than if I drop the other end, Doug Jones Group. If I have Remax Smith Realty Brokerage, Doug Jones Group, that means a totally different thing than Remax Smith Realty, Doug Jones Brokerage, Doug Jones Group. Yet you won't find anywhere in the media or the provincial regulators coming out and warning consumers against this. So on top of all of these new hiding of dual agency starting in 2018, you've got all of these other underlying issues that are going on. And the consumer hasn't been told any of them. And if you go to your lawyer listeners and ask them if what Ross K is telling you is the truth, let your lawyer give you the answer. Because the lawyer is the only one who's going to say, yeah, Ross is telling you the truth. We have had to change our buyer program with the wealthy homeowner, the strategy that we use, because of the rule changes that are coming into place in British Columbia and Ontario. We have to change the questions, the simple questions that our members ask a real estate agent when they're talking to them in order for our members to get a truthful answer are totally different questions in 2018 than they were in 2017. Those are the forces that are working against home buyers. That's why home buyers are misled. That's why house price bubbles appear. That's why housing markets have to correct. That's why you have foreign owners owning real estate in Vancouver and nobody knew about it until it was too late. It's why you had 7.6% of the Vancouver new properties built over the last 6 years being purchased by foreign buyers. Those properties those great premium new properties are no longer available. It's why in Ontario, the foreign buyers aren't Chinese, so they're buying condominiums instead. Where the Chinese in Vancouver buy luxury detached homes. This is because the FINTRAC forms were never completed because of the ignorance that exists in the industry. Home buyers are going to be inundated by ignorance in 2018.
We'll have more with Ross Kay right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Ross Kay. Ross, today the Bank of Canada released a survey that stated confidence by lenders had increased, and the banks are seeing that as a warning that rates will increase this month. How do you read the survey?
How do I read the survey, Jim? This is a classic bait and switch by bank economists. Now, I used to believe that everybody knew these bait and switches were black and white. You know, I believe that everybody knew that these went on. What we have right now is the bank economists are shills for the banks. So your listeners need to understand that. If you think that a bank economist is going to say anything that will harm the position of his bank, you are crazy. Bank economists work for the banks. Bank economists' jobs are to ensure the shareholders of the banks are protected, which means share price goes up. What we had today was the Bank of Canada mentioning that they do a survey of lenders, and today's headline was business loans are going to be going up. In other words, the banks are saying, "Hey, we're going to keep lending more money. The businesses who borrow money from us are going to borrow more money in 2018. They're so positive about the economy. They're so positive about trading with the United States. They're so positive about job growth that they're going to be borrowing more money. They didn't say anything about mortgage debt today. Because everybody remembers, for the last 6 years, all we have heard is about Canada's burgeoning mortgage debt. That's all that we've heard. The reason you heard it was because that's how the bank's profits go up. So the bank economists pretend this mortgage debt is bad because it means that their banks are making higher profit. And for people investing in the bank stocks, they hear, oh, the banks are lending more mortgage money. It means the bank's going to make a higher profit. This has gone on for decades. This is not revolutionary, or this is not surprising. This is simply a fact. What you didn't hear today, Jim, what you didn't hear today was November of 2017, mortgage debt was just reported by Bank of Canada today. And what you didn't hear is that the mortgage debt increased again. But what you really, really, really didn't hear, because you've never heard it before, was the amount of new mortgage debt booked in November of 2017 is 1/2 what it was in November of 2016. That's right, folks. The amount of new mortgage debt booked in the month of December, meaning the houses that closed in the month of December, where the buyers who purchased those homes had to go to the banks or trust companies or somewhere else to borrow money to close on that sale, was 1/2 what it was in 2016. What we track these numbers, we don't track them so that people can short bank stocks. Okay, we don't track the way that we read the numbers for any ulterior motives other than knowing what's happening in the housing market. The reason we knew about the Vancouver Ponzi scheme flip, a currency exchange Ponzi scheme, where a Chinese buyer was purchasing a house and selling it to another Chinese buyer who was selling it to another Chinese buyer, was because there was a hole in the financing in British Columbia. There was a hole in the mortgage debt. There was not enough mortgage debt being booked for what your housing prices were increased. Okay? We know these numbers. We know that it takes a 1% increase in new mortgage debt being booked to have your average housing prices increase 1%. I think I said that on last week's show. What you heard today was no mention of mortgage debt. You heard today was business debt is going to be booked. Then you heard the economists say that means the Bank of Canada can raise interest rates. Oops! What have we said in this show for the last year? The banks don't care about mortgage debt. They care about the profit they can get from homeowners who borrow that money. If your interest rate goes up, the spread that the bank has to work with grows. And they have played this spread for over 40 years. They use it precipitously at the correct moment in time to fool the consumer, to fool the home buyer. I have watched, since we started really watching this back in 2013, where the market should have immediately trended downward, except the bank stepped in and the spread between the posted rate and their discounted rate was shrunk. So in other words, they gave you, even though they should have charged you a higher interest rate, which would have led to the housing market to slow down, they decreased the amount of discount that they were earning, giving you more of the discount. What I mean to say by that is giving you more of the discount, so your interest rate would drop. They have played these games nonstop for the last 40 years. The game never changes. Your real estate person, your mortgage broker, your financial advisor should have been laying all of these things out for you so you knew when to get in and out of the market. Our members knew that if last November of 2016, was the very best time in Canadian history to get a mortgage. The best time. Because we could get a mortgage at 1.99% for 5 years. We do a calculation on mortgage debt, which is called the home ownership cost. So we don't look at affordability the same way that everybody else in Canada looks at. We don't have those crazy affordability calculators that the Royal Bank publishes, or TD Bank, or Scotia Bank, or the Bank of Canada. We don't use those crazy calculators because they're all lies. They don't work. They're not reflective at all of how the 15 million homeowners in Canada own their houses. We track housing affordability based on homeownership cost. How much does it cost you to own that home? The price you pay for a home, folks, has nothing to do with its cost. You just think that it does. The cost is, how much does that mortgage going to cost me to carry over the next 25 years until I pay it off? How much am I going to have to spend renovating and renewing my house? How much are my property taxes going to cost me? Those are the components that you should be comparing against rent. Because those are the only components of home ownership costs that matter. The principal repayment does not matter. As I've told people on your show, you want to become a millionaire? Buy $1 million house. Because as long as you can pay off that mortgage, you'll be a millionaire the moment that house is paid off. Plus, you're going to be more than that because the house is going to go up in value. That's not that I'm here to say that any of your listeners today should go out and buy a house tomorrow, because you shouldn't. You missed that opportunity. That opportunity was back in 2013 and 2014. If you wanted to catch all of the house price gain, that's when you needed to enter the market. We are now a part of the cycle where the worst thing you can do is get into the market at this time. When the banks no longer talk about mortgage debt, they start bragging about business debt, you know that the pendulum has swung. Now, do I believe that the bank economists are this deceitful, this selfish, that the banks are, do I believe it's a conspiracy? No, I don't believe it's a conspiracy. I believe they're just that ignorant to how a housing market functions. Today's business debt announcement by the survey released by the Banks of Canada, where all of the banks are now saying we expect mortgage rates to increase next week, is because they want to get those spreads back in their favor. Mortgage debt for November of 2017, the amount of brand new mortgage debt book was 50% of what it was in 2016, a 50% reduction. Now, I'm not going to get into a long discussion on how you can't just look at an individual month. You need to look at a 3-month window to understand what's really going on, because your closing dates don't align. So your listeners can't take exactly what I'm saying and go out and look for a resource that correlates with what I'm saying, because it's way more complicated. Even though it's simple, it's way more complicated than that, because you have to know how all of this information gets reported. The fact of the matter is, today, the same day they start bragging about business debt, the amount of new mortgage debt booked in the month of November was half of what it was in November of 2016.
We'll have more with Ross Kay right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HoweStreet.com weekly recap on our homepage, HoweStreet.com. Welcome back. We're chatting with Ross Kay. Ross, a new survey's out. What do people want in a new house compared to what they used to want in a new home?
Awesome question, Jim. Awesome question. Timely question, too. It's timely because this is a lot of the real estate myths are rooted in this survey. What you're talking about in this survey, survey debunks many, many real estate myths. There is no question a couple going through a house in 2017, finding the decorating from the home that appeared in Home Alone, would turn around and walk out the door. They would not, those buyers walking in and seeing 1980s decorating would not see the structural bones of that house. They may have thought it was stunning from outside when they drove up, because it was a classic, stunning home. But the second they walked in and they saw teal green wallpaper with a paisley print, with teal green carpets or dusty rose carpets with bright brass accents, which predominated the homes in the 1980s and 1990s, they would turn around and run. And they would say, you wouldn't catch me dead buying that house. That's because home buyers' viewpoints change as the new builders themselves change their interior design of their model homes. It doesn't work opposite. In other words, it's not the home buyers say, this is what we want, so the builders give it to them. It's never worked that way. The designers for the builders create these beautiful photographs, which appear in Architectural Digest, the local home news, the television, ads, and home buyers who may be quite happy in their own home look at these pictures and they think, wow, is my house ever outdated? Wow, are these new homes ever fantastic looking? Wow, does it really have 9-foot ceilings on the main floor? Our house was built in the 1970s. Our ceiling is actually only 7 feet 8 inches tall because that's when the energy crisis was on, and the builders lowered the roofs so you could save energy. What? I can have a beautiful house with 9-foot ceilings now? Oh, I'm going to move. Home buyers are guided by what the builders offer to the public in their advertising, not the opposite way. These surveys that the builders do simply reinforce the decisions their interior decorators made a couple of years before. But what's important for your listeners to understand, this is one of the reasons you get house price increases. Home buyers, generally speaking, purchase the newer homes. It's way, as a real estate sales representative, it's way, way easier to sell a beautifully staged home, one that's been fully renovated, than one that hasn't been. And that's what your listeners need to understand, because this survey just debunked all of the myths that you heard. Obviously, if home buyers prefer a newer home, those newer homes, when they were built, cost more money. So the average selling price goes up. Your average selling price is skewed every single year because of the new housing stock that's being built. But you can't find that anywhere. You can't find that metric anywhere. The only way that exists is Ross K. Realty Consultants. We're the only ones who produce that metric because we produced it for 40 years in Burlington, and now we produce it for everywhere in Canada. We know, generally speaking, home buyers, the average home that is sold is 12 years old. We know that that's what it is. So our market intelligence, Ross K. Realty Consultants, knows the average home buyer prefers a home with an average age of 12 years. Has always been that way, always will be that way. There are reasons why they prefer that age of a home is preferred on average, but that has never changed. So obviously, if the average home is 12 years old, that would mean today we're talking about a home that was built in 2005. 2005 would be 12 years old, or 2006, however you want to talk about it. Obviously, a house was built in 2005, 2006 is not even the same home that was built, a house that was built 20 years ago. And if home buyers prefer newer homes of higher quality or higher renovation, obviously selling prices go up. It's got nothing to do with the houses themselves. It's just the houses the people are buying. It's why we have said on your show for years now, the average selling price has got nothing to do with the houses. It is a buyer side metric. They are going to, in Calgary right now, you are purchasing a house at about 23% less than you would have spent for that exact same house in 2014. So 3 years ago, before their market started to correct and when the price of oil dropped and the market started to correct. Okay? 23%. You won't find anywhere in Canada where they're telling you housing prices have dropped 23%. The exact same house has gone down in value 23% in Calgary. That's because Calgary had a whole bunch of new builds. So people, instead of spending their money in the resale market, spend it on the new homes. This is one of the reasons I tell your listeners, a housing market correction hurts homeowners' net wealth more than it hurts builders. Builders have such staggering room in their housing prices at the end of a trading cycle that they can take a huge reduction in price and still sell their property. Builders react to price changes instantaneously. Within a month, builders react to a changing market. It takes homeowners 18 months before they react. by the time they know what's really going on, it's too late, and they get these 20, 30% reductions in their home's value. That's how you get a house price correction, folks. This survey that Jim is citing out by the new home builders, you can go look at it right now. You're going to see right in this report, home buyers are telling you that they want what the builders are already selling, not vice versa. That means unless your house is of that quality, offering those features, when the housing market is correcting, you're forced to take less money. That's why there's houses in Vancouver today that are selling at 30 and 40% below what they would have sold for in July of 2016. You can't argue these facts. E-value assessments are out. We post this a couple on our Twitter feed. These are irrefutable changes. Your people need to start getting advice, honest advice, explaining all of these things to them about their largest single financial investment they will ever make, that being their home.
Ross, a lot of people have received their home assessments now in British Columbia. Can we do a show next week about how people can appeal those assessments? I know for a fact some people have seen their condos assessed 52% higher than they were a year ago.
I warned on this show that is exactly what was going to happen, Jim, and it has happened. We can do a show about that next week. But I also want to talk about foreign owners having their property tax paid for by young, first-time home buying millennials in Vancouver who purchased condos. Because their 50% condo increase means that the foreign owner of a home that's caused you in the first place to have to pay more than you should have paid for those homes, now you're going to supplement their property taxes. I think we can add to the show too, Jim.
We'll do that. My guest has been Ross Kay. Thanks a lot, Ross, by the way.
Hey, thank you, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HoweStreet.com radio. Find us on Twitter at HoweStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HoweStreet.com, and those include questions for Ross. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.